Asian markets are softer as commodities continue yesterday's slide and U.S. futures are flat. ECB officials say there is no time for complacency in Europe. And U.S. markets set to close its best first quarter since 1998. I'm Taylor Schrounce, and the morning call starts right now.
Good morning, I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Lindsay Bell from The Street. Together we bring you the Morning Call Express. We're quickly approaching the end of the first quarter. Friday is March 30th, and the stock market is on track to make its best performance in almost 14 years. Scott, where can we go from here?
At this particular point, traders are trying to figure out what's next. And we've had a great quarter. There's been great participation from every sector. We've been led by tech. We've been led by some of the home builders, led by retail, led by the financials. But at this point, we're not exactly sure where the money's going to shuffle. So I would say at this point, in the last day or so, I definitely trimmed down a lot of the positions. I've been taking a very, like a multiple position type of approach since the December 20th gap and go. So as we approach the reshuffle, I like to get lighter. I like to see where the money's going to start flowing, and then I position that way and I rebuild my portfolio as we close quarter one and enter quarter two.
So why don't we take a look at the S&P?
Okay, so if we look here at the chart, there's really nothing to be alarmed at yet. You look at the S&P, here's that gradual trend that has never been tested. Then you have the more macro trend, or I'm sorry, the more accelerated trend that we tested, right in late February. And then last week, we actually came in and tested the 10 and 20 day again before going. Yesterday, we had a little bit of an afternoon sell-off, but today the futures are in stride. And I think as long as we could continue to do some work above 1400, I don't think momentum traders have anything to be worried about.
And we've seen a couple groups really lead this quarter. Financials, retail are two of them. How do you position yourself going into the second quarter with these leading groups?
Well, the problem with the leading groups, or not the problems, is you don't know if they're going to start to pass the baton. And right now, the financials and retail and tech are still in the lead, in control. If you look here at the XLF, you will see that this group's been very strong. You had a really nice breakout above 15. We're now consolidating a little bit, and it's a little choppy. Yesterday, you saw the action negate the previous day, so that's a little bit of a caution sign, but as long as we hold the 10-day or the 20-day, and we can go sideways, I do think these banks are going to continue to lead, but you just want to have your eyes and ears open just in case profit takers do come in because they're done, just say, marking them up for the first quarter, but I don't think it's game over. I still think they have higher prices this year. You just need to know your time frame.
One of the leading banks this year has been JP Morgan, and at the beginning of the year, Stephanie Link at Action Alerts Plus, she really liked the name given the valuation gap versus peers, but it's kind of given back in since then. So where do we go here? What are the charts telling us?
I would just say that if you were in Tier 2 or Tier 3 JP Morgan, it's a time to be in Tier 1. JP Morgan has been leading the way for the banks. It's been a great barometer to watch as a trader. If you look here at the stock, you've had many different buy prices. This is when it ignited, when a lot of us got involved thinking it was going to be a great January effect play. This is when Warren Buffett put in his PA, and here was another nice breakout. So all the way up here, if you just want to buy a bank, you got to be a bit more careful. Yesterday, you did have a short-term little reversal where it made a new high, came down. I'd like to buy JP Morgan closer to the 44 area. And if we do get a little bit of a correction going into quarter two, here's a 20-day. And I think this would be a very, very compelling spot if we pull into that level, because we haven't really pulled in that much over the course of this whole time period.
Another leader in the group is Goldman Sachs. Their valuation is a little bit better, and so maybe it's something more to look at. They haven't seen the run JP Morgan has.
They've been moving. It's been moving pretty well. I would just buy dips on Goldman. And with the banks, you just have to pick and choose one or two of them, not all of them. A different group that's been very weak has been the oil service sector. Okay, it's been a slow, methodical move, but lately it broke a few different trends.
And we have seen some downtrends in the oil sector. Some of the weaker names, Schlumberger and Halliburton. What do we do with these stocks?
With these, I think you need to figure out if money will rotate there. If you look at a quick chart of the OIHs, it did have a nice methodical move, but this accelerated trend broke and then got retested. Now the more macro trend is actually a little bit damaged. So at this particular point, if you look at the weakness there and you look at the weakness in Schlumberger, you could see that this is also well off the high. So you have to see if that continues. But at this particular point, we're going to get into all these charts, all these stocks, the strong ones, the weak ones, the haves, the have-nots in the long form. So tune in then.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.